Today, we are breaking down one of the wildest earnings days I've seen in a while for a crypto miner. We're talking about Bitfufu. They dropped their Q2 numbers, and what happened next was just a complete and total roller coaster for investors. All right, let's dive right in.
So, picture this. It's 8 a.m., the earnings call kicks off. The initial market reaction, pure excitement. By 8:30, the stock is flying, up more than 9% in the pre-market. But then something shifted. All that enthusiasm just vanished, and by the time the market closed, the stock had completely reversed course to finish down over 5%. Just a brutal turnaround. And that really brings us to the core puzzle we're going to solve today. If the report seemed so good at first, why did the stock just collapse? To get to the bottom of it, we have to look at what got everyone so hyped up to begin with. And then we have to uncover what they found when they started digging a little deeper. Okay, so let's start with the bull case. These are the big, shiny headline numbers from the report that were fueling all that early morning optimism.
First thing, and it's a big one, is earnings per share. Bitfufu posted a non-GAAP EPS of 9 cents. Now, the analysts on Wall Street were only expecting 6 cents. Beating expectations like that is an immediate green flag for a lot of investors. Checkbox number 1. Then you get this number, a net income of $47.1 million. I mean, just look at that comparison. Last year in the same quarter, they made just $1.3 million. On paper, this looks like an absolutely incredible explosion in profitability. It paints a picture of a company just firing on all cylinders.
And this chart just drives that story home. Adjusted EBITDA, which is a really good way to measure a company's core operational profit, just went through the roof. It jumped from about $8 million all the way to over $60 million. So again, this just reinforces that story of a company with massive, surging operational strength.
And what's backing all this up? Record-breaking growth in their actual operations. Their total mining power, their hash rate, hit a new company high of 38.6 exa-hashes per second. So let's recap. You've got an earnings beat, soaring profits, record expansion. It's a clear buy, right? Well, not so fast.
Now, let's flip the coin and look at what happened when the market started to read the fine print. This is where a totally different story starts to take shape, and where all that early optimism began to crumble.
So the very first crack in the bull case was the top line, revenue. Despite all those flashy profit numbers, the company's total sales actually missed what analysts were expecting by almost 7%. You know, for a lot of traders, a revenue miss is a big red flag that maybe the underlying business isn't quite as strong as it looks.
And this, right here, is probably the biggest piece of the puzzle. That huge $47.1 million net income, well, it turns out a staggering 84% of it, almost $40 million, wasn't actual cash profit from their business. Nope. It was a non-cash gain because the Bitcoin they were holding went up in value. So the real profit from their day-to-day operations was way, way smaller than that headline number made it seem. And if you zoom out, the context gets even more telling. Over the last year, an ETF that tracks a basket of Bitcoin miners was up almost 60%. But Bitfufu's stock? It was down more than 23%. This tells you that even before this wild earnings report, the company was already lagging behind its competitors.
Okay, so with all these challenges kind of bubbling under the surface, what's the game plan? Let's take a look at the strategy the company laid out, because it's really all about a major pivot.
At the heart of it all is a big shift. They're moving away from just mining Bitcoin for themselves and leaning much more heavily into their cloud mining platform. That's where they sell their computing power to other people. This service model is now over 81% of their revenue, and they see it as a much more stable business, especially now that the Bitcoin halving has really squeezed the profit margins for traditional miners.
Their other massive move is to go after their single biggest cost, electricity. And the plan is pretty ambitious. They want to become their own power company. The idea is to source cheap natural gas, build their own power plants, and basically control the entire energy supply chain. If they pull it off, it could give them a huge cost advantage over everyone else.
They're also exploring some really futuristic stuff, like tokenizing their hash rate as what's called a real-world asset, or RWA. Think of it like this. They could take the future income from their mining machines, turn it into a digital token on the blockchain, and then sell that token to investors. It's a brand new type of financial product.
And you have to understand, all of these big, bold plans are built on a foundation of some serious optimism about Bitcoin itself. The CEO, Leo Lu, actually said on the call that he thinks Bitcoin could hit $200,000 by the end of next year. That tells you just how much their entire strategy banks on a super bullish crypto market.
So, after weighing the good, the bad, and the very ambitious future plans, what was the market's final verdict? How do we make sense of that crazy stock chart?
Well, in the end, the market was basically caught between two stories. You had the bull case, great growth in their cloud business, and a really smart strategy to control costs. But then you had the bear case, which was just impossible to ignore, a revenue miss and profits that were mostly just paper gains. So the final verdict was this. Investors see a company making some brilliant long-term moves, but they just couldn't get past the risk and the questions about the company's financial health right now. And so that leaves us with the million-dollar question going forward. Is this huge pivot by Bitfufu a stroke of genius, a visionary move to build a stronger business for the future? Or is it actually a sign of weakness, a desperate scramble away from their core mining business because it's facing some serious problems? That is the puzzle the market is going to be trying to piece together for a long time to come.